All right, we are back again with a market where we just have to wake up and sell. That's what I know about. That's all I know about crypto market in June. Yeah, and welcome everyone to Tradeify Crypto. And welcome Glenn, welcome Johnny Smith, and today we are going to learn in deep about order flow with Anastasia. So stick around and find out. And also, let's take a good look at my screen and see what we have on the chart. And just June said, wait for daily open and just sell it. Nothing. Probably tomorrow we might see same same sort of on crypto market. And it's like there is not a single pullback in this market. It's just going down and down and down. Hello, trader. Thank you. Welcome to the crypto channel of Tradeify. And enough is enough. Eight and I. God, what a good name you have. That's what I'm. That's what my brain is saying. It's enough is enough. Like I'm actually going to sell this thing which is falling with, even though it's a FOMO trade. So it's like just look at the charts and press the red button. That's all. Don't even calculate your risk. Just sell it. It will go down. And let's see what we have on the monthly chart. Let's break down what kind of market we are looking at, and that is Ethereum is actually at a very I would say interesting area on higher time frame. Take a look at this support level on monthly, which actually maybe in future it might become resistance because prices closing below. We might feel the entire wick and imagine going to 1400 on Ethereum, and that's the right time to buy. I think that's the lowest. We have only two swing lows on monthly, which is at 1400 to be approx, and another one is at 800. And what do you guys think? Let me know in the comment section. When the bull run will start from 1400, or maybe from the current level we have, or maybe price respect this level and close back above and continue higher. What do you think about Ethereum? Let us know in the comment section, and please hit the like button. And also, we are very close to 2,000 subscribers, and make sure to hit the subscribe button, and we will do amazing giveaway like we did at 1,000. So yeah, for Bitcoin, I feel we still have another support level which we are not about to, but still have time, where I feel we take out the previous swing low, and then give us get some reaction on higher time frame. That's my view on Bitcoin. So yeah, and let's take a look at gold and look at this beauty pumping right from the point of control, ranging and continuing higher. I'll share the setup I took. I actually took a short and it went well, which I uploaded on my X. And I actually took a short from this level, which I'll break down later. But look at this move right here. Consolidating directly from point of control to breaking above this area, breaking above low volume nodes and like absorbing all the sellers in this market. And I feel this move was actually something which I was looking for, but I feel I'm done with the base hit, and I'm now just gonna watch what happens. And let's take a look at not BNB, but I feel we need to take a look at Zcash. And we have Anastasiia with us. So make sure to have a pen and paper, because we are going to cover order flow together on this live stream. So let's take a look at Zcash, and here is the pair doing absolutely fire on 4-hour time frame. And don't think it's in a range. It is on 4-hour, but this pair is something which you can trade on lower time frame as 5-minute, which is the best time frame to scalp on the on the only altcoin which is really at a very low commission. So let's go on the lower time frame and look at the daily opening. I think this is back in range and then continued lower. Not like Ethereum and Bitcoin, just open and go, open and go. That's what even you can see the daily time frame looks like a 1 hour chart on crypto market, and it is so volatile. Yeah, hello Anastasia, how are you doing? Oh, I hear you.
I'm indeed muted. How are you, Ayush?
I'm doing great.
So you're trading Zcash today?
Actually,
for non-farmed. So you're long gold, I suppose?
No, I was actually selling it and I'm done. I actually sold it here. Yeah, it was scalp on lower time frame. It was something like this. I actually shot a stop. The high, and I was targeting this point of control. So this was my trade, and I was like, why left my up? Look at the trade. I just closed my sell and the pump directly right after the TP. So it's painful, but yeah, I'm done for the day on PaxG.
But you closed your short in profit, right? Before it's
yeah, exactly. Right? Before we hit the point of control. Yeah, so.
Okay. That's fine. That's good because I'm actually long on gold since the morning. So literally, when you exited your short, looking at your chart now, when you exited your short, I entered the first long, and then we started going up, and I added one more long and then another one more long. So like we basically flipped with you. You know, we had a reverse trade. You closed the short, and the same moment I entered my long.
Yeah. Actually, I was thinking for another trade, but some work came up. I would have taken long on this beautiful pump. I think it covered in just few minutes. So yeah. And let's break down some coins which some of them are Boris' favorite.
Sure, we can break it down, and then I prepared something special for our today's live stream in terms of footprint, actually, and order flow. So we can break down a couple of
We should do that. We should do it right now before we can break down the crypto coins later.
So just give me 1 second. I'm going to reload the stream. It doesn't let me share the presentation. And I'm going to jump back in 1 minute, and we can get it going. And you guys make sure that you grab some notes, it's a piece of paper, because I prepared a couple of setups that you can apply immediately right after our today's live stream. So make sure that you are ready to take some notes. It's going to be really good. So I'll see you back in just 1 minute from now.
So meanwhile, I actually didn't trade all this TRX and this kind of. Let's look at Hype. Something which is I call it Nasdaq of crypto market. On weekly, we are having a nice pullback. Is it a second chance for us to go long? Because I feel this is a support level which I would look for on Hype, and I feel okay. Let's go on for and let me remove this. So I feel we are about to tap this opening of the previous candle, which can act as support. And in every stream, I have explained why I use the wicks and opening price. They are just previous rejection, which can again act as a support if price is about to tap the zone or maybe convert it into resistance and go much more lower. So these are two levels which I'm looking at on Hype for continuation. So if I get some sort of confirmation on Hype for longs in this area, then I'll go long after I get some confirmation. And the second level is 55, 54 on the daily time frame. So and let's get Doge. Doge is doging or not? I would say, yeah. Doge is dodging back again, and look at this beautiful setup right after the daily open, and price closed below, maybe I don't know how much time this candle. Yeah. On lower time frame, we had enough time to grab this quick scalp on the Dogecoin. So I would have taken this 1:1, but a daily open is too early in my country where I live. It's mainly morning, so I would not. That's why it's really. I think I really like to trade the daily open, but I can't. Even if I force it, I feel so sleepy, and I just like, let's go. Let's trade in normal hour where I feel energetic. Yeah, so we have Anastasiia back, and she is going to start the presentation of order flow. And I'm also going to grab my pen and paper to add and to do some tweaking in my model and pick some things which can help me to improve my model. So yeah, all stage is yours, Anastasiia.
Thanks a lot, Ayush. Everything is working now finally, my camera, everything. So let's get it started. Let's get it going. Guys, last time we actually talked about the basics of footprint. So I decided to pick it up from there since we already were here. And by the way, if you have any questions, just let me know in the chat, okay, during our today's live stream. I'm not going to be able to see the chat while I'm doing the presentation because it's kind of taking over my full screen at the moment. So I'm gonna go through the questions right after. But in any case, or if you have any questions, Ayush, if you can tell me just in the chat, and I'm gonna just stop the presentation, jump back to the questions immediately. Sure. Thanks a lot. So for those of you who don't know me, I've been trading for the past 10 years, and 6 out of those years were using the order flow and footprint and volumes. So before, I was pretty much trying to test everything, multiple indicators, different price patterns, candlestick patterns, pure price action, Fibonacci, Elliott wave theories. I've tried so many different things, some concept of smart money. I even was trading the binary options, scam. So I was trading the binary options as well. And after, losing some money, after making some money, after finding out that for me at that point, the price action together with theories of Elliott waves, for example, and Fibonacci were the most profitable, they made the most sense. I was still feeling like there is something missing. So I understood, and I was able to quite accurately at that moment, let's call it predict where the price would reverse before the price would even get there, sometimes days ahead. But I was having a missing, like there was a puzzle missing, which would help me to find the connection between, okay, this is the plan and it works out, but why? The question was, why does the price reverse from specific zones? Why does it accelerate here and there? Why are those zones important, and what's behind the chart? And none of the indicators, none of their different trading methods were able to answer this question. Now, 6 years ago, I was passing like some courses, and I've actually figured out that there is something what is called the footprint, order flow, and volume concepts. And the first time I've seen it, I felt like I'm trying to learn Chinese language. And I've never learned Chinese language. I don't speak Chinese language. So for me, it was pretty much the same thing as I would try to learn Chinese at the moment. So, and then going deeper into this and trying to understand it, I realized that this was the missing piece of the puzzle that is able to answer me the question, why is the price reversing? Because what it shows the exact where market participants are trading. And it showed me the market auction theory, which we talked about on one of the previous recordings as well, during our previous live streams. So the market auction theory was standing behind every single price movement. And the problem with all the indicators and all of the things is not that it's not working. And I know lots of successful traders that are profitable using different kind of concepts. But the problem is that all the indicators and all of this kind of things, including price action itself, it's trying to predict the future by looking back far in the past, because all the indicators are the derivatives from the price. So the price needs to be formed. Then mathematical formula takes this price, converts it into the indicator, gives you the signal, you take your decision. So by the time you take your decision, the move already happened a long time ago. So what is the sense exactly in trying to predict the future movement by looking at the past, yes, it's kind of some of their repeatable scenarios and chart and behaviors, but wouldn't it be easier, besides looking and trying to find some consecutive behaviors, right, in the market, wouldn't it be easier if you would also be able to confirm it by looking at what's happening at the moment and knowing what the other market participants are doing to make better decision potentially, right? So this is where the footprint and order flow and volumes come in, because it shows you at the moment. So it makes the gap between what's happening and your decision smaller, as much as it's accessible for us as retail traders. Okay, so today we're going to talk about the asks and bids distribution. We're going to talk about the basics of footprint again for those of me who missed the previous part as well, and just to cover some of the things. And we're going to talk about the concepts of delta and how it helps us to talk about, to see the traces of major players, and the most important, some of their setups that you can apply immediately right after our today's call. So let's get it going. Okay, so as we previously talked, there are two types of different market participants, right, in the market. So in general, if you look at the whole concept of the market, there are two types of different market participants, and there are two types of orders. So two types of orders, two types of market participants, fairly easy. Passive market participants who are using the pending orders. So essentially they're called passive market participants because they use the limit orders and specify the price that they want to get in the market at, meaning they're going to sit and wait until the price reaches this level and until the other trader accepts this price without rushing. This is why they're called passive. Because you place your limit order, doesn't matter buy limit, sell limit, and you wait until the price gets there. And it doesn't really matter if it's a hedge fund, if it's a pension fund, if it's the big investor, or it's a home trader, right? It doesn't really matter, because the moment you use the limit orders, you become a passive market participants, no matter big or small, no matter the capital. Aggressive market participants are the ones who do not want to wait. So if you say, hey, the price is moving and I want to get in the trade right now without waiting, you use immediate execution. So buy by market or sell by market. And that's when you are called the aggressive market participant, right? Because you get into the market aggressively. However, we are able to get in the market at the moment, but we also pay the price for this, because we don't get exactly where we want to get in at the price level, but we get usually the worst price that we anticipate, including the slippage and the spreads. What is really important about those two is that they cannot function without each other. So for the passive order to be filled, it needs an acceptance from the aggressive order. Aggressive order needs a passive order to get filled. In other words, sell limit orders require the buy by market order to connect with, to match, and to get filled in the market. This is how market auction works. And buy limit order will require the sell by market order, sell aggressive participant to get filled. So they match and the orders get filled. So on the footprint charts, like we basically all of us, we look usually at the left side, right? We are used to look at the market just in the form of a candle. Japanese candles, it can be bars, it can be range XV charts, that doesn't really matter. You look at the candle. And usually the candle, Japanese candle, has what? It has the open and close levels, right? Where the candle open and closed, the high and the low, and that's pretty much it. And then we try to guess who was more aggressive by if the candle was bearish or bullish, and if it had a wick or not wick, and if the wick was long or not. And we try to learn some candlestick patterns to help us to predict certain price behaviors that can happen next. Now, right on the right side is the X-ray of this candle. So if you imagine the left candle in the form of a footprint, that's going to be the right side. You still have the open and close. The footprint is essentially the high and the low, but footprint is showing you not only this, but it's also what is happening.
Anastasiia.
Yes.
Sorry to interrupt you, but are you sharing some different presentation, or it's just the screen we can see right now?
It's a screen you can see right now. Why?
Yeah, now we can see the candle, or because before it was just ask and bid distribution presentation.
It was not switching. Oh, thank you for letting me know. Yeah, actually, thanks. It was probably hanging because I was sharing it. Yeah, just let me know if it stops. Thanks a lot, Ayush. So footprint is basically showing us what was happening inside of this candle. So how did the price actually get formed, right? You have bids, you have asks inside, so you can see how many asks or bids were traded within this candle on every single smallest price level. So on the left side is always located bid, on the right side is always located ask. So you have these two types of bid and ask orders, right? And both they are located always in this position, so never reversed. So in other words, again, it's an X-ray of the chart. I don't know if it's now, I'm worried if it's showing. Yeah, it's showing, I think. Right, okay. So this we understood, right? Now, what's coming next is the concept of delta. So for now, we were looking at the footprint charts as a distribution between ask and bid. Now, there is also different types of footprint charts because you can also look at, for example, the amount of trades. So the amount of total volume, so the contracts. You can look at, for example, delta. And delta is something that we're gonna be using really a lot in the next series of calls that I'm gonna be doing on Thursday. So you have two different concepts, right? You have volume and you have delta. On our previous webinar, we figured out that volume is kind of the summary of all asks and bids. Ayush, you can see the slide now, ask and bid and delta?
I mean, it's, for now, it says bid and ask footprint chart, not the delta.
Okay, so it's really not flipping, okay.
Now I can see it.
Yeah. Okay, so I need to exit and enter the presentation every single time. Okay, so let me go back here. So we're gonna talk about delta and what is it in general and how it's helpful, because we're gonna be using this concept a lot. This is something that I use a lot in my trading as well, every single day. And we have two different concepts. On the previous call, we figured out that volume is a summary of bid and ask. So if you look at the footprint candle, these two numbers, you sum it up, let's say one bid to ask, you sum it up, it's 3, that's volume. Delta is almost the opposite. So delta is a difference between asks and bids. So it's always ask minus bid. Volume is ask plus bid. Delta is ask minus bid. Okay, so in other words, one second. So in other words, delta is a difference between the number of market asks and market sells over a given period of time. So for example, per candle, per minute, or for the footprint cluster. So if you talk about footprint, it's basically in the cluster, right? If we talk about the whole candle, you can also see delta for the whole candle, just as you can see volume for the whole candle. It's gonna sum up all the orders plus asks and bids within one candle. That's gonna be a total volume of the candle. If you do all the asks minus all the bids within one candle, it's gonna be the delta for the whole candle. So I hope I'm trying to make that difficult concept very easy. So again, how is it even possible that we have the difference, right? Because the last time we talked about that, in a matter of fact, there is always the same amount of asks and bids, even the order gets filled. So how is it even possible that we have a different amount of asks and bids on every single price level if it needs to be the same? Well, first of all, it's because the footprint is read diagonally, and secondly is because the orders obviously get filled by the limit order together with the market order, just like we talked before. So the buy by market order needs a sell limit order to be filled, sell by market order needs a buy limit order to be filled. And within a footprint, so when you look at the candle, the bid will be sell by market plus buy limit. the ask will be buy by market plus sell limit. So if you look within the footprint candle, the bid is sell by market and the ask is buy by market. But the limit orders are reversed because they are matched with the opposite market order. I hope it makes sense, okay? If it doesn't make sense, I hope this now makes sense, okay? So it's not only bid and ask, you can look at it as bid orders or ask orders within a footprint candle. So not only bid and ask, but think about this as a bid or ask orders. And hopefully this makes even more sense. When you think about bid and ask, on the left side, you will see aggressive sellers and passive buyers because they get mashed together. On the right side, where asks are, you will see aggressive buyers and passive sellers because they're mashed together. So that's how the footprint is formed in a core of it, right? And we have also the option to switch from this footprint, so from the basic bid and ask footprint to the delta footprint. So what's called the delta footprint on the right side. And the delta footprint is basically taking asks minus bid on every single price level and filling it in inside of the footprint. If the cluster is green, it's because there were more asks than bids trading on this inside of this specific cluster, on this one price level. If the cluster is red, it's because the delta is negative, which means that we had more bids than asks trading on this specific price level. The brighter the cluster, so the brighter the rectangle is, the bigger was the difference between asks and bids. If it's bright red, it was much more bids than asks. If it's bright green, it was much more asks than bids. I hope it makes sense. Let me know in the chat, guys, if you have any questions now, because the presentation is forcing me to go out of presentation and come back. I actually can have a look at the chat. And Glenn is asking, does this work on any time frame? Yes, but I will show you afterwards and you will understand that the best way to use a footprint is on the smaller time frames. Because the higher the time frame, the more data you get inside of one candle. And trust me, it can be very uncomfortable, especially on volatile markets, like, for example, Bitcoin, to look at, for example, 1 hour footprint. Yes, of course, you can have a look at the footprint on any time frame because it's formed like this and it works and you can have a look at it. I'm going to show it after, but it's better to use it on the smaller time frames. So if you guys have any questions, let me know. But for now, if it makes sense, can you, how many people are now watching? Can you guys put 1 in the chat if it makes sense, or like a plus? Can you put a plus in the chat if it makes sense so far? Just as a feedback.
Some people are watching us.
Nice. If you guys can put a plus in the chat if it's making sense. Oh. Jizu, I know you love Ayush's presentations. If you want, you can exit and come back when he is going to be teaching. Yeah. I'm not going to be offended, actually. I will be gladly taking notes myself as well. Thanks, guys. Thanks a lot. Perfect. Amazing. So let's keep it up. Let's keep it going. So again, the red clusters, like if you put it super simple, right? Red clusters mean stronger sellers. Green clusters mean stronger buyers. If the candle is mixed like this, it's a mixed signal. So it's usually before reversal or when the price is consolidating. If the majority of the candle will be green, it means that within this candle we had overall stronger buyers and most likely the movement will continue higher. If the candle will be mostly red, it means that we had more stronger sellers and most likely the price will continue lower after this candle, no matter the time frame. If it's mixed, it's mixed. It also can be that the candle is almost white because there was not a big difference between bid and asks, and it's slightly green or slightly red, but it doesn't really make like a big difference. Like for example here, and it can be the whole candle. It's also a mixed signal. It also means that there is not enough volume. It also means there is not enough activity. So perhaps it's better to just stay away from the market. when there is not enough volume. So footprint charts not only help you to determine when to buy or when to sell, but it also helps you to figure out when it's better to stay away from the market. If it's mixed or if it's completely empty and almost white, because there is no activity, there is no disbalance between buyers and sellers, so it doesn't make much sense to continue to trade at the moment until the market clarifies some things, you know? So if we go further, okay, so here on the example of the chart, we see that the chart was like slightly mixed, but mostly we had a bright red cluster. This was the brightest cluster, which shows us a big disbalance of sellers. The next one becomes much more red, as we can see. So sellers start picking up and more aggressive sellers are entering the market, which pushes the next candle lower. The more closer we come to the reversal, the more empty the footprint becomes. Then we have one more attempt of sellers to push through, but notice that the candle is already bullish at this moment. So they are trying to push through, but the footprint is already mixed, half green, half red. And the next candle, buyers start picking up. From the whole move down, this is the first time when we see the bright green clusters, which shows us the big disbalance on the buyer's side. That was almost 500 asks, which we never seen before. So buyers start picking up, and already here, all the way at the bottom of the reversal, you could say, hey, I need to exit my shorts. I need to consider flipping long, because there was 500 asks versus not so much shorts, and versus the whole movement, which we didn't see such amount of asks. It's not normal, it's abnormal amount of asks in this one cluster. So you here already can say, hey, I actually better exit my shorts if I'm holding one. And I think I'm gonna enter my long position. And then we see the footprint turns mainly green and the price starts picking up the upwards movement. And so again, to sum it up, and then I'm gonna go through a couple of just simple, straightforward setups that you can apply immediately. I'm gonna tell you which timeframes I use for this, and it's gonna work on every single instrument, including Bitcoin, Ethereum, and liquid cryptos. Okay, so everything that is liquid, not pump and dump, is gonna make sense on this. So let's get into this. So again, if it comes to the positive delta, it usually shows that buyer aggression and the potential demand and upwards impulses incoming. If you see the negative delta, it usually shows the seller's aggressive, potential pressure downwards, and the movement down is coming. However, there is a but. There is a very important note to be taken. If it's the divergence between the price and the delta, so for example, price is going down, candle is bearish, but delta is strongly positive, it usually means that it's an absorption, in this case, of sellers, right? Of buyers. Delta is positive absorption of buyers, and price keeps falling despite the attempt of buyers to push the price higher. So if it's a disbalance and it's a divergence, it's usually the opposite signal. So let's have a look at this. There are a couple of trading methods that I use myself for daily trading, including gold, including a mini S&P 500, NASDAQ, currency futures, a little bit less, but still, and Bitcoin and Ethereum. I tested, it works. So we have, first of all, very obvious, the positive delta with the rise in price. So bullish candles, rise in trend, which usually confirms buying and suggests the potential continuation upwards. So buyers are entering the market. Footprint turns green. There are more bright green clusters within the candles, and the candle is bullish. You can put it very simple. It means that buyers are actively, aggressively buying by market, and their attempts, or like their effort is equals the result. So actually their effort is pushing the price up. It's working. Yeah, no. So it's most likely in most cases, it indicates a continuation to the upside, because the buyers are active, they are buying, there is no much resistance, the price is going to continue higher. So you get the pullback towards the bright green clusters, and this is where we're going to be buying. So the bright green delta is not only serving as a confirmation of the trend. If the price pulls back to this on the next candles, it usually serves as a confirmation for the entry. This is how, for example, within a trend, if I'm already in the trade and I'm already buying, and I see the green bright clusters, so I see, and the price continues going up, if it pulls back, I can add to my profitable winning trade, because it's helping me to determine that the price is most likely going to continue to go higher from there. So this is one of the confirmations for me personally that I'm going to be adding to my winning trade and maximizing the profit that I already have. So this is serving me as a confirmation that I can maximize my profitable winning trade during when the price is already running. So I know that a lot of traders actually have a problem with it. They're like, okay, I missed this movement, the price is already going, and so on and so forth. So this exactly can help you to solve this problem and still take a trade when the price is already going. So the next is the opposite, right? Very logical.
Anastasiia, before we move forward, Jisupi is finally asking you a question. What if you don't have participation from longs, but price moves up?
You mean if there is no aggressive buyers, but the price is moving up?
Yeah, something like that.
It's it's always moving up because there are aggressive buyers. It just can be that there is no disbalance. So the delta is almost neutral between the asks and bids. So there is an empty footprint. For me, it's a sign that the trend is not strong. It can continue for a while and then can come back, or it can continue a little bit and then stop. So I'm usually not entering this kind of trades. That being said, you have the indicator, what is called the delta or the cumulative delta both, and you can still look that the candle can go up, and within a cluster, it can be like no difference between bid and ask. So it can be almost neutral. But for example, price goes up, but the overall delta of the whole candle is mostly negative. So it still shows the absorption of buyers, an indicator of the further reversal down, or the opposite. But delta is slightly positive for overall candle, and the price is still positive. It means that it's an uptrend, not super strong, but the intention of the market is to continue higher. In other words, it helps you to enter the market when you see a strong participation from one of the sides. I prefer to not enter the market when there is no strong participation from buyers or sellers, because what's the point? That's not enough, that's a lot of interest, not a lot of volume. So most likely the trend is not established very well, and not a lot of strength and common in this trend. So if something happens, it can shake in the trend and reverse it. So I prefer to not enter the trade like this, but using some other confirmations. For example, some people do. So we can have a look afterwards at some charts, and real example. And we can have a look. We can try to find this example as well.
Yeah.
Thanks, Ayush.
And here's another question. What if the price moves up, but the shorts are entering with a delta negative? I think that's what we call absorption.
Yeah, we're gonna come to this in a moment.
Yeah.
We're actually gonna come to this in a moment. I'm gonna explain this concept as one of the trading methods that I really, really use a lot. So yeah. So we're gonna come to this in a moment, but this is just basically the second method, and then we're gonna come to absorption. So before we were talking about positive delta and positive movement, now negative delta and negative movement, so falling price. Logic is exactly the same. You see the price was consolidating and the footprint was pretty much balanced, mixed. Then the strong shorts are entering, delta is bearish, price is aggressively falling, sellers are showing the dominance on multiple levels within the candle, it usually shows the continuation of shorts. Buyers were trying to pick up, but the candle was still bearish. So buyers were getting absorbed and the next candles were still going down. So this is usually the sign of the continuation of the short trend and shows us that right after this is formed, the bearish footprint with bearish delta inside, with a strong bearish candle, body of the candle, it's usually the sign for us that we can enter shorts or continue to hold shorts if you are already in one. And I think this is the answer to the question that was asked. We have two opposite scenarios, right? And two opposite trading methods. It's a positive delta, but the price is going down. So as you can see, the price was dropping. The candles are bearish, right? This line here indicates the body of the candle. So candles are bearish. The trend is clearly bearish. But within this trend, we had active buying. So aggressive buyers. It's usually it's called the rejection of buyers' activity, continuation of a drop, or it's called an absorption. So what's happening is that, like how liquidity is formed, right? The market always has a lot of limit orders, sell limit orders above the current price, buy limit orders below the current price. You can see it in a heat map, for example, or in a DOM, depths of market. So the price keeps dropping, and here more and more sell limit orders being placed. So when aggressive buyers are trying to buy, they're like buy, but they're facing the wall of sell limit orders, which is not allowing for the price to go higher. So this is what's happening here, for example. The prices, buyers are trying to buy, but here is already a wall of new sell limit orders that was placed, absorbing those buys and not allowing the price to continue higher. So the prices continues to drop because it faced the wall and more sellers start picking up and still is dropping the price. So it is called the rejection of buyers' activity. It's called the absorption, and it's an indicator of the continuous bearish trend. And you can enter shorts on the failed buyers' activity. So if you see the strong bearish candle, within the strong bearish candle, there was a lot of buying, but the candle was still bearish. When the price pulls back to this zone of the buyer's activity, as you can see, it perfectly pulled back to this zone, you can take a short for the continuation of like a bearish trend. And the same exact thing is going to be applied the other way around, right? So you have the negative delta, but the price is rising. Principle is exactly the same. Price is going up. More buy limits have been placed immediately below. Sellers are trying to sell, but they're facing the wall of buy limit orders, and liquidity providers, big market participants, they keep adding those buy limits because they don't want the price to fall. So it's failing. It's like they are selling, but the activity of the sellers is failing. And the price is eventually continuing going higher because at the same time, the same big market participants continue to aggressively buy. So they continue to buy aggressively. The price keeps going up. And this was a rejection of the rejection of the failed sellers activity. And you can also take a trade from here. We see that the price didn't really pull back towards this level, but we saw one more here, and we saw that it was holding the zone approximately our support. So you could take a trade with a stop loss below this candle here. As much as you could take a trade here for a sell with a stop loss above the previous candle, within which was the aggressive buying. So this is the principles. If you have any questions, there
are many actually.
Yeah, I'm gonna have a look at the chart in a second. So Johnny, on TradingView, they kind of made this footprint charts, but I think they made it out of the hype for the footprint and order flow now. I would really stay away from that because it really doesn't reflect any truth about their order flow. And besides this, if you open, for example, the TradingView for, for the Forex over CFDs, is not going to be correct because it's decentralized market. So you can trade footprint on, for example, cryptos, even if it's one exchange. For Binance, for example, you know, Bybit, the pretty big exchanges, there's enough volume to analyze it. You can also try to get the aggregated quotes, for example. You can also analyze several exchanges for the better, for the better cause. You can trade futures, so the standard futures, for example. You also can trade because it's centralized market and you can get the data from one data provider. It's going to be correct. But trading view, really not, and it's the footprint isn't correct there, so just don't spend your time on this, honestly.
Also your money.
Sorry?
Also your money on TradingView. Don't buy the premium plan.
It's like, if I want $59?
Maybe much more than that.
It's crazy, man, for something that doesn't work.
Yeah.
Okay. Where are the limit orders? It's if it comes to the footprint, it's like this. On the left side is beats, and on the left side is aggressive sellers plus passive buyers, because this is how the order was matched. So if you see, for example, 21 here, it's 21 sell by market plus buy limit. It's one order. One sell by market plus one by limit. It's one order because this is how it's matched. On the right side of the footprint is buy by market plus sell limit. That's how it's matched. So in footprint, you can see the executed trades in total. If it comes, for example, to heat map or depths of market, you will only see buy limits and sell limits. You will not see the market orders. In footprint, it's the opposite. It's an executed orders that you see. Yeah. Yeah, it's here. So it's this. And I think I'm going to switch to my actual chart. And we're going to have a look at some of the examples, shall we?
Yeah. Yeah. And also, please suggest them that if you are new to order flow, make sure to choose a platform which really suits you, because even when learning order flow, I think it will take some time for you to understand which platform is really going to work for you. That's my opinion on the platforms. Like we have Atas, we have many. So explore each and every platform and go with one.
100%. I actually got stopped out here and one break even, one stop, because I didn't move my stop loss to break even yesterday. So I re-entered, I entered short on this pullback. And then here I closed one of the trade break even. And on the second one, I didn't move my stop loss to break even. So I got my stop. And then here I entered first long. And then here I entered the next long. And then here I entered the next long today. So I made back the loss from yesterday night. But if we talk about the footprint, so this is the footprint on 30-minute time frame. And that's exactly why most likely you will not want to use the footprint on the 30-minute time frame, because it's just until you see the whole thing is just way too long. Of course, you can technically, you can some of the things, you know, some of the levels, if it's like a super bright level, but there are other more comfortable tools for you to filter out those levels, because you can set some filters for this type of clusters to pop up. Like, for example, for me, you can see this red circle here. It means that there was a specific amount of volume within this one candle that is interesting for me. I can also set it up as there is a specific amount of buys or sells, bids or asks within this, and it shows me without me needing to check it. Where I actually use the footprint is the 5-minute time frame for gold specifically. For example, here. So we have gold, as we can see. And we did have their pullback here. So we had sellers stepping in. The price still tried to go up. It failed. And as we can see here, before the move started to go up, we had buyers activity. Price started to go up. We had a bullish candle. And then we had, this is actually the bearish candle, but we had the buyer's activity, price started to move up. So we had a long week. And then we had a seller's activity, we had aggressive seller selling, but the candle was bullish. So this was a perfect example of absorption of sellers. So the sellers were entering the market. There was a big amount of bid orders, but the price was bullish. The candle was bullish. And the next candle, the bearish candle, pulled back perfectly towards the zone between those two bearish clusters, took the liquidity and took off. So this was a really good platform here for a buy if it comes to gold. If it comes to Bitcoin, for example, this is their 30-minute time frame chart. And here, one of the things that it's not a footprint necessarily, but it filters out also the clusters. So we had a lot of buying here. We see the price dropped, took this buying and took off to the upside again. So this was also the same exact thing. You put some filters, it shows you the activity of buyers or sellers, so the volume, and you can enter on the pullback to this. It's exactly the same principle. So this is the footprint on Bitcoin. So for me, it's a little different settings. 1 second, I'm gonna fix a couple of things. Here we go, 250 here. So we will see also that it's different settings because here it shows the body of the candle. But overall, if I zoom out slightly, you will see that here the footprint was mixed. It was both green and red. Let me just change the settings to make it simpler. And then when the price started to pick up the upwards movement, we had one more attempt of sellers, but the price went extremely up. Footprint was extremely bullish. This was the first sign that the buyers are taking the control over on the smaller time frames as well. Before this, we can see it was mixed. This was a buying footprint. We had a lot of buying, disbalance. This footprint was also mostly green, still mostly green. And we can see that here we had also just a candle before. This is a 5-minute time frame. We had a bullish candle. We had an absorption of sellers. We had aggressive buying. And look at how the price is behaving now. It's pulling back exactly towards the zone of the huge amount of asks and bids. And it's trying to pull back from here. So you can also use it on the Bitcoin, for example, or Ethereum. Sometimes what I do also is, this is Ethereum, same principle. Our principle is exactly the same. Sometimes what I do is I go on the smaller time frames. So I use footprint always on 5-minute time frame myself. And then besides this, I use something what is called the range XV charts, or you can just pick up the 1-minute time frame, because it's going to be showing you much more closer look. So it's not about the time frame at this point, it's about how fast can you notice the change in the footprint. Even if you are not a scalper, for example, you determine the zone of the interest, the price comes to the zone, and instead of trying to place just your buy limit or sell limit, hoping that the price will reverse from the zone and you're not going to get stopped out, you can look at the footprint within the zone, confirm if the market participants are in line with your expectations towards this zone's rejection, and then enter the trade without the hope already, but actually with the confirmation that at this moment, the price is the most likely to start moving into your direction. So it takes away the guesswork, it takes away their hope part, it takes away some of the stop losses because you enter too soon or you didn't see that one of the sides is like the other side is still more aggressive and taking over the control. And it helps you to trade together with the big market participants who are actually pushing the market. Because however we turn it, even with all the money that we as retail traders bring to the market, we are only the small part of it. And the liquidity is actually formed by the big market players, not the small market players like us. So whatever we do, it doesn't really matter, right? The only things that we can is try to see what they do and try to be a few traders who actually trade with them and not against. Because the statistics, 80 to 90% of the traders are losing. Why? For many reasons, because they enter unprepared and because of the psychological aspects and so on. But at least many parts can be taken away by the footprint, right? Like, for example, being unprepared, being too late, being too early, being not confident enough to enter or exit the trade, exiting the trade too late, giving away the profits, exiting too early, giving away the profits, So some of the things can be taken away by footprint. And if you can get a little bit more profitable, a little bit more confident, a little bit more calm when you enter the market, then why not?
Exactly. And also we have one question from Jisupi. Show the invisible limit order that were executed and kept the price down, please. I need to see the invisible red delta on the candle.
Show the invisible limit order.
Invisible.
I'm not sure what you mean by invisible limit order, but wait, let me process the question. Red delta, invisible red delta on the candle, I cannot show you because if it's red, it's visible by default.
Exactly.
But, okay. Let me show you the absorption, if this is what you mean.
Best topic,
I suppose you mean the absorption. Let's try to find the example on the real chart. This is an absorption of sellers, for example. We had a mostly aggressive selling here. 1 second. We had mostly aggressive selling in this area, as we can see, and the candle was super bullish. So that was an absorption of those sellers, which is essentially, again, the delta is what? Delta is ask minus bid, which means that we had more aggressive selling here than aggressive buyers. And if there was more aggressive selling, it means that it was facing the buy limit orders here, absorbing those buy limit orders, but the price still couldn't go down. So despite having a lot of buy limit orders and sell by market orders, the price was still going up because those sell by market orders were getting absorbed by those buy limit orders. And then buyers stepped in here on those clusters, pushed the price higher. So you cannot see the limit orders itself, right? It's always in a footprint. If you look at the footprint, at the bid and ask delta colored like this, for example. Let me just zoom in more. If you look at the footprint like this, you will be able to see the bids on the left, the asks on the right. The bids, again, are always sell by market plus buy limit. The asks are always buy by market plus sell limit. So if there were more bids, because the footprint here is more red, it means there was more sell by market and by default, more buy limit orders here. But buy limits were strong enough to hold the price. And then buyers stepped in, aggressive buyers, and were able to push price higher. If it's really difficult concept for someone, last time we were talking about what's called the DOM and the market auction. And I think without the previous lesson, if this is the first time you see the footprint or one of the first times, it can be really, really difficult to understand. So if you go back, last week we were talking about this on Thursday as well, actually, I think. or Wednesday.
Yeah.
When did we call? On Wednesday, I think, no?
It was
Thursday.
Yeah.
So on Thursday, we were talking about this. And on Thursday, I was showing this auction theory and by how the orders get filled. And if you understand how the orders get filled, this will make sense a lot, like a lot. If you don't understand how the orders get filled, it might be really difficult.
And also, we are just getting started. Like every single week, we have a specific day for every single host to explain the strategy. So it's not like it's the last day for Anastasiia explaining order flow.
Yeah.
Like every single week, we are going to go in much deeper. So it's like free mentorship on YouTube. Yeah, for you guys to learn whatever like model you want to learn. And if we talk about absorption, as Anastasiia said, this is the best topic and best thing I use in market. I really like it when passive orders get absorbed and the aggressive orders take control. Okay. we have Jonathan with us. I was not expecting him, but yeah.
Okay.
I was not expecting him. Like you are sad that he's here slightly. Hey, Jonathan.
Yeah. I saw Roman. You added me as soon as I joined. Thought I was gonna get some warm up time. Here I am. All right, I can hear you guys now. Beautiful. How you guys doing?
Hey, Jonathan. How are you?
I'm good. I am good. Hopefully my PC won't be lagging like crazy today. Have you guys been having any issues with like Google Drive and Gmail and things today?
No,
that's weird because I can and this started yesterday, when the PC started lagging. I can go into Gmail on my laptop and phone, but not on the desktop. It's super weird.
Really weird.
Yeah, I think it's something with. I've been using Claude Code a lot. Maybe something's happening with that.
Possible.
All right.
So I was trying to find a good example, but gold was ranging the last few weeks, so it was not a good example. If it comes to the footprint, for example, the red footprint, here is a part when Bitcoin was dropping, right? And it was strongly dropping before. So we had a mixed footprint when it started to consolidate. The red and green both together in the candle. And then when the price started to pick up the drop, we can see more sellers activity. So the footprint becomes red. There was more bright red clusters here, and it continued to go down and more sellers were stepping in. When the price started to reverse, we can clearly see how the footprint switched the color to overall green. So this is a very basic, but a very good start to understand the footprint. So when the candles turn red footprint and the price was continue to drop, so the candles are bearish with the red footprint inside, it's usually the continuation of a drop. If it starts to get mixed here, we see that we still have selling, but the candle was bullish. Then it was a mixed both buyers and sellers, and then it was a bullish candle and the footprint was mostly bullish. This is a sign to get out of the short, start considering long position, because as we can see, all the candles afterwards have turned bullish footprint. So we had more asks than bids. And again, on the drop, more bids than asks. And then again, mixed, until we pick up the strong movement again and we can see more buyers activity one more time. And what is very interesting as well is that every single time when the price will break through the big volume areas, so for example, here was a previous hourly point of control, you will see more volume coming in on the footprint because it takes more strength to break through the big volume areas. So usually the footprint will become brighter around big volume areas. So now I'm going to show you the live example because I'm still holding one long on gold. If it comes to gold at this very moment, I'm holding this long, and we came to the last month's point of control. We rejected this big volume cluster here. The price made a pullback. It starts going up, and now we are consolidating between the previous volume and the last month's point of control. So, okay, this can be deleted. So the last month's point of control. So if we look, for example, at the footprint now, this is a range XV, but doesn't matter. You can use a 1 minute, doesn't really matter. We can see that the price is trying to break through. Now let me just make it a little bit less sensitive here. Here. The price.
Wait, I think, wait. I'm terribly sorry to interrupt, but I think there's someone out there called Rich who is watching. And I would just like to say, hello, Rich. Welcome to the live stream. We like you. And sorry, go ahead, Anastasiia.
Wow, that was very official.
Yeah. You know Rich as well, and then obviously we all know Rich. He's Rich. Like, yeah, he misses you. He's like, he usually starts texting me quite often, like, hey, is it okay if I go in and watch the live stream? I miss you guys. I miss Anastasiia. Yeah, it's awkward, but he is a bit awkward.
We miss you too, Rich. So we had this buyers activity here, but the buyers were trying to push through, and the footprint was turning again mixed, and again the bearish candle beside the buyers activity, so observed pullback. The price comes back, we see almost no activity, like again, okay, it's quite bullish, but majority of the delta is balanced. Again, more volume coming in, attempt to break the last month's point of control, again failing. Now again, picking up the direction, again trying to pick up the movement. So we can see that it's still trying to break through, but there is lower and lower acceptance we can see of the prices. So the price is failing to break through the last month's point of control. So for me, it's a very good sign. Now, if you don't break above the value area high and the previous highs, I'm going to be closing the rest of my long. I already closed 70% of my long here, and the 30% is still running to see if it's going to break through this or not. But because there was attempt 1 failed, attempt 2 failed, attempt 3 failed, we are lowering the lows. We see not enough buying activity to break through the last month's point of control, to break through the current, the previous highs as well formed during this hour. For me, it's a sign that most likely we're going to go down from here. We're going to see the rejection on the market opening, so I'm going to close my trade. So it's a live example of how you use a footprint basically to see if the price will be breaking or not breaking this level. For me, for the current moment, it looks like we are not breaking because there's not enough buyers to break through the previous month's point of control. I think that's it from me for today, if it comes to the footprint chart. Okay, yeah, I think they're not coming back after this, I think.
Yeah, I think one hour of a subject like that is I was gonna say enough, but obviously not. But you know what I mean. It's 1 hour of doing a presentation is well enough. I'm sure I'm looking at the charts are very ugly. I gotta say, like it doesn't like it looks weird. With the footprint charts, weird. It is very difficult for me to kind of like, as someone who comes to from the world of candlesticks. But I like the idea of being able to actually see what is going on within a candle. I'm sure you've talked about this, but this is something that is more useful for. Maybe an intraday trader that wants to know what's happening within the current candle, right? And not maybe a swing trader that, trades structure, right?
It depends, because I, as a swing trader or like intraday trader, I can also use like footprint charts, because as a swing trader, you determine certain zones from which you expect the price to continue higher or lower or pull back or reverse, whatever. So instead of guessing when the price goes to this zone, if the price is actually going to reverse or not, and having some of the stop losses because it just swipes through the zone, you can wait on the footprint chart for the start to pick up the movement and your side of the trade. For example, if you are looking to buy, for buyers to pick up the aggression, because you can look at the footprint also on the higher time frames. You can also use some of the filters or some indicators that are going to scan this footprint for you and highlight specific clusters with a specific activity. So if you say, okay, in this zone I want to buy, I want to see the activity of buyers, you put the filters, okay, I want to see more than this amount of asks within this candle, within the zone. If it does, the candle is bullish, I can buy, I can hold it long term as a swing trader. So you can use a part of this as a confirmation of taking away the guesswork and getting rid of some of the stop loss that all of us got just because we entered too early, too late, not like the price was not ready, and so on and so forth. So it can be used, it can be adapted. But mostly now it can be used by the scalpers or intraday traders.
Yeah, no, I get that. No, it makes a lot of sense. Thank you. Great explanation. Now, I would like to ask you two rather, important question. Ayush, you live at home, right?
Yeah.
Do you vacuum? Do you vacuum clean? Like, do you clean your room? Like, surely your mother says, "Hey, Ayush, clean your room."
Yeah, sometimes.
It happens, right? Do you vacuum? Do you do the vacuum cleaner?
Yeah, I do.
Okay, Anastasiia, you as well. I guess you use a vacuum cleaner.
Almost never, no, but yeah. But
I know. So then what?
I know what's a vacuum cleaner. If that's what you're asking.
Okay, so what do you actually use then? How do you clean your floor?
I don't.
You don't clean your floor, but you have a dog.
My dog doesn't lose hair, and I never clean. I hate cleaning and I hate washing dishes. So the moment I moved out and I started to make money, that was the first thing I fixed. I never clean.
Oh, so you hire someone to clean for you?
Yeah.
What?
They use vacuum cleaner.
How much money do you make? Like I don't like what? Well, that's insane. I don't have that type of money. Maybe I do. I should look that up.
It's not so expensive.
Why you asking about this?
Less expensive than you expect.
Why I'm asking is because I'm having a conversation here with Mike on WhatsApp, and he says that he said that he has a robot at home, and I'm like, what type of robot? And he says it's a Roomba. I'm like, what's a Roomba? Sounds like a Polish battle bot, but it's actually it's a vacuum cleaner.
That's great stuff.
Yeah. So I'm thinking maybe I can get one of those because now in the summer, Roomba vacuum cleaner.
I got it for my mom. Maybe not Roomba. It was a different model, but it's amazing. Mm-hmm. It's actually really good.
It is. So you different rooms, you have the separators or whatever, like I don't know what's called.
Yeah.
Does it actually go over them?
Yeah, if it's not too high, it scans the whole room, and then it goes from one room to another room. And then it charges itself, and then it can go again.
And then it goes into your living room and it kills you at night.
like water crawls on your face until you cannot breathe.
Yeah. No, so that's what I'm thinking. Maybe I should get one of those. Yeah. Anyway.
Glenn is saying that he has one that also mops, not only vacuum cleans.
That's good. Because I sometimes I do it, sometimes my fiance does it. I try to do it sometimes because she does everything, so I try to do something. And I'm thinking one less thing to do if I get one of those small little robots, Roomba. That's a weird name. Roomba. Sounds like a dance. Roomba. Anyway, what I guess we can change subject now. You think we can if enough people are interested though, we might have a Roomba giveaway. And I'll join that one. And yeah. On another note, my crypto positions are looking absolutely horrible. I went long on Bitcoin yesterday, as you guys know. I went long on Sol. I went long on TRX as well. Oh, it looks bad. Looks bad. I'm around break even on the account today, so that sucks. But it is what it is. That's how it goes when you focuses on cleaning equipment instead of actual trading.
So that's that.
What?
So that's the reason you're doing research on the robot.
What's the reason? Sorry, I'm lost.
Because you said that you had to clean your room, or maybe you entered different direction in a trade because you were busy.
Yeah, that's exactly why. Of course. Yep. I don't get it, but yeah, I agree. You know, that's something that I've learned in life is if you can't understand what someone is saying, simply nod and smile and just walk away. That is how you deal with situations like that one.
Smile and pop up from the stream for 2 minutes to reconnect my charger.
Yeah, sure. Do that. Cool. Where do I have the live stream? Here we go. There it is. All right, chat, my Roomba loving viewers. I need a Roomba affiliate link. Yes, you do need a Roomba affiliate link. Mike is in the chat as well. The mop one is very handy. Good. Speaking of mops, let's take a look at Bitcoin. It looks absolutely terrible right here. It's mopping the floor, literally, at 60K. Usually, I think what you say in English is like mopping the floor is like something good, right? But this is bad. This is one of those mobs that's been laying in dirt for a very long time, and then it's been out in the sun for a long time. It's a very bad mob, and we are on Bitcoin. Obviously, we had that massive move to the downside. Biggest liquidation cascade and liquidation event of the year happened when we broke below the 70K region. So that's interesting. Now, what I'm watching on Bitcoin is actually a reversal here. I am looking at this as a potential trade. I am currently long on Bitcoin, and I'm looking to get a move back up into the 71K region, or the at least 70K resistance. If you look at the 4 hour, we can see on the RSI that RSI has not been this low since we hit the 60K level in the beginning of February, right? So what I'm watching here on Bitcoin is actually some type of bullish divergence, and I'm not really sure how accurate the divergences are on RSI when it's this massively oversold, you know, because you look at this, and what we have right now is technically a bullish divergence, right? You have price making lower lows, and you have the RSI making higher lows. But how accurate is that really when RSI went down to almost 11? Now, it very rarely does that, right? If you zoom out and you look at RSI here, where did it go? Here it is. So if you look at the RSI here, this is on the from all the way back in February 2025, right? So one almost, you know, it's a long time, and obviously very low, right? So this is the move to the downside, and this is the one where we went down to 60K. Now, if the RSI goes down here, then it's not going to stay down here for a very long time. That's how the RSI works and how it's measuring momentum. It's not going to stay at 11 for a long time. So I'm thinking, when you're getting a bullish divergence on the RSI after such an extreme move, maybe it's just RSI resetting. Okay, so I haven't done any testing on this, but I feel like it should make sense. That argument seems logical, right? So I'm not really gonna be looking too much on that low on RSI. I'm instead gonna be focusing on this area, right? And if we can create a bullish divergence with a new higher low, right? So maybe price can come down here. Maybe we have equal lows on price or whatever, or that price trend is simply continuing a little bit further down while we're establishing this uptrend on RSI. At that point, I would view this as a bullish divergence on price and RSI. Now I think it's just a mean reverting move on the RSI. But I think once we get that, if we have a very clean setup up to 70k. So what I would be watching is something like this, right? Just a stop loss down below that wick, and then a TP at 70. And if we get that, I think even a negative risk to reward trade would be could be in play here for me, because I think if we do see signs of this being support, I think there's a highly likely scenario of price moving back up into that 70k region. Yep.
And I have same view on that thing as well, because we are about to tap. We are actually in a very important zone of Ethereum in a higher time frame, so we actually need a really good pullback to continue much lower. Or if it's just daily open and down, daily open and down from this June month, it just wake up and sell from last 4 days.
It's interesting scenario though. Like, it's what happened here? Why did we dump here in January? Do you remember what happened?
Not exactly, but the same stuff as we have right now.
I need to do some searching on this. Okay, so we got end of January. Maybe the chat can help us out here. Do you guys remember if we had any major macro event at that point? We can look at the stock market as well and see if it had a movement back then as well. So January. I don't think that was so. Roman in the background says that's Iran. No, because I actually think the Iran war broke out here, right? In end of March, right? Wasn't that? And or my kid could be completely wrong. Let's see. Let's ask Claude. Please tell me what happened from a geopolitical and macro point of view at the end of January that caused Bitcoin to break below 80k. Okay, my dear friend, let's see what you got. I mean, I know there's something happened, because that was literally when the whole correlation with the stock market completely broke down. Surely there was some massive catalyst that drove price down. I was also thinking that it might have been the start of the war, but the war has been going on for like 3 months. That's right, we're almost at 2k subscribers, guys, and yeah, let's do it. We're gonna get a giveaway coming up soon as well, so let's hit that 20 likes before we get that giveaway going. We're gonna be giving away 2 accounts today, because I was just babbling on for too long yesterday and we forgot about it.
So what are you guys thinking before tomorrow's non-farm?
Yeah, I haven't really thought about that much, to be honest. I haven't looked. I've been so busy this week. I haven't been able to do any sort of significant research. What are you thinking?
I'm thinking that I'm gonna close my gold long and I'm gonna sit on my hands until the non-farm is released. And actually, we talked about it yesterday a little bit. Yeah, my chart is not shared one, so I'm gonna reshare it. So we talked about it yesterday. So the numbers for non-farm are expected to be better. So non-farm payrolls lower, unemployment higher for the interest rate. But if you look at the stats on the initial jobless claims, continuing jobless claims over the past weeks upon weeks, you will see that drop, and you will see that more job places are open based on the JOLTS bureau. And you basically see the strong labor market. So I don't know where the expectations are coming from for tomorrow, like forecasts, quite out of nowhere, because the previous non-farms were also not like this. So I'm expecting the opposite than forecasted. And I'm expecting the lower potential expectations towards the next interest rate decision as well. So now we have 98% probability that the rate will stay, but 29th of July, the next one, we have 80% expectancy that the rate will stay, more than 10% that it will be hiked, and then some of the probabilities that it will be cut. So I'm actually expecting the cut potential to decrease even more and hike.
I mean, it's all
increase.
Yeah. So what do you think? Like, so the current situation, obviously, it's interesting because, I mean, if we didn't have AI, then the stock market wouldn't be rallying, right? Because we are in a situation right now where that we like, people talk about the everything trade, right? And the everything trade is like when gold is rallying, Bitcoin is rallying, all the stocks are rallying because we're in a growth environment,
but we are not in a growth environment now.
No, exactly. I mean, we have and the situation in Iran is obviously a situation where at least for now it's pushing inflation higher, it's pushing the price of oil higher, it's pushing prices higher, its consumer confidence is lower, the consumer is going to be hurt quite a lot, most likely by this, and it has a tail effect as well. So it might be lingering in the economy. Even if the war ends tomorrow, it's still like it's going to take a while for everything to recover. We know that, well, I can't say we know, but Trump is going to end the war one way or another. Like, there's no way that he's going to let this spiral out of control into the mid, what is it called? The mid-election? The I don't know what the word is for it, but yeah, the midterms. Yeah, that's right. So the midterms. So he's obviously going to do everything he can to make sure that we are in a situation where, and I think we also had a report where we saw that some Republicans are now joining the Democrats in urging Congress to stop the war, because they do see that the probability of Republicans to win a election with this, is becoming lower and lower the longer this war goes on, because it's creating a situation that is just not really good for anyone. So then, to me, like, it makes no sense for the Fed to hike in current situations until they have a clear path of what is going to happen with inflation, and they're not going to cut rates. And are they going to hike? Like, I don't know. Like, I think holding is probably the best decision, and probably what they're going to do now. NFP numbers, I think the expectations for the NFP numbers, a lot of people are expecting it to be quite high. But I remember I saw an interview, I can't remember who, but there's a YouTube channel. There's a guy called David Lin. He has a YouTube channel and he interviews a bunch of these finance people, traders and hedge fund managers and all of that. And I saw an interesting interview that he had a couple of days ago with a hedge fund manager, and he because they looked at Kalshi, the prediction market, and they looked at that and they said, okay, traders are betting that the NFP numbers are going to be quite high. And that hedge fund manager said, well, it's probably because of recency bias, right? Because the last print was relatively high. And now people think this one is going to be high as well. So yeah, I think this NFP number might actually come in lower than what people think. And it can really shake things up. So yeah, it's going to be interesting to see what happens.
Yeah, people actually expecting it to be better, and last time was worse. So I don't know if that's true what they were saying.
Okay, so I might just have...
So because the last, I'm gonna pull it out now. Wait a second, I'm gonna open this. Should we share it for the economic calendar? Second. So we look at their stats for non-farm. Non-farm payrolls for 2 previous periods were quite strong, in a matter of fact, right? We had a very positive non-farm. Yeah, it was slower in April than in March, but it was really, really positive compared to February, for example. And we do not know if it was true or not. And unemployment rate was going down for the last months. So it was, okay, stable, but it was not, increasing or anything as well. So we are at 4.3. If we look at the initial jobless claims today, here, we had their drop in the initial jobless claims. Out of nowhere, we have the spike because normally we have a drop. As we can see, the trend was really down, and it's still down if you look at the overall trend for a long term. If we look at the continuing jobless claims, the trend is also really down, as we can see, mostly. So I don't really see why non-farm tomorrow would be, unemployment rate would be lower, or it would be higher, sorry. I don't really know because unemployment claims are getting smaller and smaller. Continuous unemployment claims are getting smaller and smaller. So how is it that unemployment rate can be higher? You know what I mean?
Yes.
I also do think that some of the numbers that were coming out for the non-farm in the last few years were completely fake because we had the spikes out of nowhere. So, that's also another thing about it. We don't really know the real numbers for non-farm. Yeah.
Yeah, I mean the Bureau of Labor Statistics or whatever it's called that's producing the numbers. I mean, the confidence in that institution or whatever you want to call it is rock bottom because of how the numbers have been revised at ridiculous levels. So I think people are obviously looking at that and kind of taking it with a massive grain of salt or pinch of salt or whatever that is called.
100%,
yeah. So it's going to be interesting. I'm thinking about, we talked about gold, right? And so yesterday I had my presentation. I talked about the trend, and there was something I did not cover on gold. So maybe you guys can just pull. Roman can pull my screen up, and we have. So I'm currently fully allocated to the stock market, and I was in the S&P 500. Like that was my vehicle to be exposed to the stock market. But I have now moved that to a more diverse position with the global stock index, which is I think it's like 80 80% is in developed markets like US, like the S&P 500, Nasdaq, and then we have Taiwan, and we have the Japanese market and DAX and Europe and all of that. And then 20% is in emerging markets. And because of the fact that stock market obviously rallying quite a lot on the AI driven boom right now, I'm happy to stay in those positions. I don't really have a reason to exit, but I have exited gold, where I'm only 50% allocated to gold, and I'm thinking I want to keep that position in gold for as long as this level holds. But because I do see a possibility that if gold fails to hold this level, I see a possibility of moving 10% to the downside, or maybe even 25% to the downside. If that happens, like, I don't really know where the low is going to be, but that's why I want to exit, right? Because it could be a 10% move to the downside, or it could be a 25% move to the downside. So it's going to be interesting to see if the NFP numbers, when they come out, if that could be a potential catalyst for gold to break down. And if that happens, then I'm going to exit that full position. And then I'm looking at Bitcoin, and I actually have this idea to perhaps buy something here, like 1 or 2%, just add that 1 or 2%, because 60, like any level around 60K, I don't think that's a bad price. I mean, I do think that there is a potential bottoming scenario, I believe, happening around October, so somewhere around here. Which I'm thinking then, maybe we'll get perhaps one more move up to 70K, and then if we break this level, like where would the logical bottom be for Bitcoin? So if we assume that this is going to be the trend, maybe we can actually just use a linear regression indicator here as well instead. I mean, so let's see if I can make that a little bit bigger. We start this one from the accumulation point, and then we extend it. So realistically, we have a time window. Now, obviously, I don't know if that's going to be where the bottom happens. But if this trend continues, then the mid, like if it doesn't change too much, then we're looking at like 40K. I think 40K is a realistic level for Bitcoin to bottom out around the end of this year, with a time window of around October. So if I start buying Bitcoin at 1% a month, let's see, I'm going to be at 5% in October, which is 50% of my max allocation. And then I continue buying 1% per month for the next 5 months. I should, in theory, have a pretty good average entry, if that's the case. So that's just an idea I'm kind of working with, and I'm not really sure if that makes sense, but I think so, because imagine if price moves like this. And then perhaps you're gonna have one strong, standard deviation move to the downside, like this, and maybe range a little bit, and maybe it wick or whatever down here, and then you start breaking the structure, right? So if we have a break of structure here, then I would then be entering my full position somewhere around this area. And that's only gonna be like 15% below current price. Now, if I scale in with one order a month, you can basically look at one order here in June, and then you have somewhere in July, maybe going to be here, in August. So what I'm saying is the average entry, if I start to dollar cost average here with 1% for the next 10 months, might actually be lower than if I wait for full confirmation. So if
yeah, I think it's actually, I was thinking about the same thing at the beginning of the year to start buying Bitcoin, regularly on this specific percentage. But are you planning to buy it, let's say, on a monthly basis or the weekly basis? So every week, same day, for example, same amount. What are you thinking about? This is an even better distribution of probability of the average price, right? To be like more balanced. What you think about this?
Yeah.
I didn't test it, so I don't know. I'm throwing it in there.
I think so. I'm doing so right now with the portfolio. I'm doing monthly rebalancing because I'm depositing money into the trading account every month. So and then so I deposit money first business day of the month, and then second business day I rebalance the portfolio. So I'm thinking I might as well just do it at the point of that rebalancing once a month. But doing it weekly, will definitely, but I guess it's a question of commissions as well, because you would then have 4 trades in a month instead of 1.
Yeah.
But the commissions are a percentage of the size of the order, right?
The size of the order, yeah.
It doesn't really matter if you do it 4 times or once. That's a good question. I'll have to do some research on that, but I do think that now that we're trading at 60K, anything below 60K for Bitcoin, I think is getting close to the point where it gets good value. But yeah. I think one of the issue with using a dollar cost average strategy like this one is that you need to be very careful in knowing when the idea is invalidated, right? Because you're basically buying a downtrend. It's very easy to buy a bull market because you know when it's invalidated. When you're breaking the primary trend, you're breaking the overall structure, it's invalidated. But now you're actually buying a bear market. So, and Bitcoin might never recover. We might never see Bitcoin at 100K again. I don't think so, but it's always a possibility. So, is Bitcoin going to go down in the bear market down to 10K? Probably not, but it's always going to be a possibility. So I think with that type of dollar cost average strategy, you need to understand when you're wrong. And then what if you sell the bottom when you think you're wrong? So it's not like now when we're talking about it, now it's like, okay, so let's just dollar cost average and it's all going to be fine. But that's because we think Bitcoin is going to be trading much higher in the next 5 years.
Yeah.
But what if it doesn't?
Yeah.
I think you have to take that into consideration as well. let's.
Sure, but the question is always, are you gonna regret more that you bought it? Because always the cycle was continuing and the price eventually returned higher. Are you gonna regret that you knew this and you didn't try, or are you gonna regret that you bought it and it didn't this time? So
yeah, I think there's a reason why I try to, when I'm investing, I try to very systematically just follow the trend, because it leaves out all the guesswork. Like I don't have to think about these things, right?
Yeah, that's true.
So I think I need to do some research on this and look at the pros and cons, because it does feel like Bitcoin is now getting into an area of good value. I think if we add the reload zone here as well, it should be entering the, for me, this area between like 60K and 40K is where I'm always going to be accumulating Bitcoin, because that's historically where it's bottoming. It's true for most of the assets out there. As soon as you go below the 0.618, if it's an asset that is going to be moving higher in the future because of sentiment or risk or whatever, then that level, that 61.8% retracement is usually a good value. So maybe I'll wait before we break down. We'll see. Guys, let me see if we can do a little duck race giveaway before we end this stream here today. I'm going out with my son to do some. We're gonna record some RC videos for our YouTube channel. Yeah, that's what I do. That's where I spend my money. We bought a really cool wireless winch. So now we'll install the winch on the RC truck. So now I have a like a tow truck. It's so cool. I see that you're very passionate about that as well. Can hear the excitement.
So how is his YouTube channel going?
It's going pretty good. He had like one video with 40,000 views. It's short.
Yeah, I remember that one. Yeah, that was crazy.
Yeah, it's insane. So now we're getting like a couple of thousand views on the shorts. It's still going better than mine. Guys, I can't access the chat. There's something with my computer. It seems like everything that has to do with Google doesn't work. YouTube doesn't work. Google Drive doesn't work, or Gmail doesn't work, but everything else works. So maybe Ayush, you could help me out.
Yeah.
So we can do. Everyone just type in BTC in the chat, and then we'll select everyone who types that in.
Guys, put this BTC in the chat if you want to take a part in a giveaway.
Yep, that's right.
Make sure to like and subscribe. You're very close to 2,000.
Oh man, I love your
wow.
Enthusiasm.
I think Ayush, you said that in the least enthusiastic way. It's like, and make sure to like and make sure to like and subscribe.
Whatever. Whatever. Like, just do it.
Yeah. All right, let's see if I can open the chat on mobile then. I really need to get this fixed with my PC. I don't know what's going on. All right, so just continue writing the BTC in the chat, and then we'll be collecting everyone, and we'll do a giveaway in a little bit. And you only have to type it in once. I'm gonna ask my good friend Dirk what he thinks about dollar cost averaging into Bitcoin. We're gonna have Dirk coming on Tuesday. So we're first gonna have Ayush's session, the first hour on the Tuesday, and then we're gonna have Dirk coming on second hour of Tuesday. I think on that one we're gonna be talking about. Yeah, good time to ask him about his dollar cost average strategy, I think. Because I think everyone can kind of feel it. It's like we're getting closer now on Bitcoin. Can you guys say something? I don't think I can hear you.
Closer to where?
Okay, I'm disconnected.
Okay, keep writing BTC, and I think in a minute I'll extract all the names, so you guys have 1 more minute. So don't miss out. Keep writing. BTC. Hello, Mehdi and Q. Good to see you back on Tradeify Crypto channel. Goroboro, welcome back. Long time no see. And actually, it's my screen which is being shared right now, which was on NQ. But I think gold is something which really gave me a really bad mood after I just closed my shot, and this just went long from the exit I had today on the London session. Next time I'm not going to leave my setup. No matter what happens, I'll wait and wait and wait. And for the new viewers, we are going to do 2 accounts today, because yesterday we were not able to deliver or to do giveaway. So 2 accounts today, and if we hit 1,000, we'll do another one.
1,000 likes.
Yeah, there is a guy in the chat who actually pumps the like. I don't know how someone does that. After we set some targets, it happened 2 times in a stream where me and Roman were like, we are at 30, and after a few minutes we were at 60. It just 2 minutes and we had 60 likes at 15 people watching us.
I mean, 60 likes is 60 likes, you know.
Yeah, so I'm just making sure he spends his money well till he get tired.
Yeah.
All right, let's get that giveaway up and running.
So I'm extracting all the names.
Yeah, extract all the names, and then you can do that one, Ayush, because yeah, whenever I try to do something, it's crashing. Yeah.
We need you, Jonathan.
It's very exciting that we have stocks now to trade. So if you go into DX Trader, you can see that we now have stocks to trade as well. So you can trade, for example, Nvidia, which is really, really cool. I know you had a discussion about this in yesterday's live stream, and I'm kind of thinking now that, like you said, Anastasiia, you know, there's now a reason to actually try trading the stock market. I just need to find a a list of all the available stocks. So I'll see if I can find that.
I'm actually super excited for stocks. It's going to be finally a reason for me to get into the stock market as well. You know, I've been postponing it. Stocks and options, they've been on my list for such a long time. So now there is no excuses for me to not get into both of those.
Yeah, I'm quite interested in getting to know the options market as well. And that's, that's very different. I mean, I've never traded futures market, but I know that it's all the same. CFD, futures, stocks, it's all assets that are moving up and down in trends, right? And you either buy or you sell. I mean, it's not really more complicated than that. But options is more complicated. It sounds like it's completely different, right? Because I mean, a contract will expire worthless if it's out of the money, I assume, and then that's your stop loss, right?
Yeah.
You're not risking a specific amount and then you have a stop loss on the chart. It's more like you are creating a contract and the conditions of that contract, you will either have, it will be in the money or out of money. It's going to expire, in profit or worthless. And to me, that's interesting because you're not it's just very interesting because, and I'm also looking into the options market of hedging my long-term portfolio. So instead of exiting the market when the primary trend is broken, I'm hedging that with options instead. So I don't have to because imagine if you have a large portfolio, let's say you have $1 million worth of a portfolio, and then you have signs of a primary trend breaking. So for me, for example, if I have 60% in stocks, that's 600,000 of a portfolio that I need to sell, which is going to be a lot of commissions. I need to, obviously that's going to cost me a lot of money to sell that position. So, and if I then have to enter next week again, it's going to cost me even more. But what I can do with options is I can offset the risk by buying a put option, right?
Yeah. Yeah.
Yeah. So that's interesting. All right, let's go. We got a duck race. Let's do it 30 seconds. Let's do 30 seconds instead of 1 minute.
Okay. Guys, I will have to leave you for the dark race for 2 minutes earlier.
Yep. Of course, no problem.
I'll see you guys Monday.
Yeah, see you next week, Anastasiia.
Thank you guys. Have a great weekend. Watch out for the NFP. Save your money so you can have to trade something on Monday.
Yeah.
Yeah.
All right, see you.
Thanks a lot.
3 set. And here we go.
All right, who's winning? We got, who do we have here? We got Tradeify Crypto TV. We got Tradeify Crypto TV with the thing, number 1. Let's go. We got Johnny Smith, number 13. It's lagging so much. I don't even know if they even, maybe you're looking. We got UK Wally ni Toke. Duke Wally. Yeah,
Mulani.
but it's just
Mulani Popo.
Who?
What's the name? Popo.
Mulani Popo. Mulani Popo. Mulani Popo. Congratulations, Mulani Popo. Mulani Popo. I think I'm saying it correct though. Mulani Popo.
Yeah, but that's so correct.
Yeah, let me know in the chat if I'm supposed to be pronouncing it Mulani Popo. If that is correct, then I should have an account myself. Okay, let's do the next one.
Yeah.
You have to. You'll. Can you send me the email address of those who are winning in the chat we have in Slack when you're done?
Yeah, sure. And
good,
set.
Good.
I think it's 3 minutes. Sorry, let's do it again.
Yeah, that's
something
not
I
30
do
minutes.
when Boris,
3 minutes.
Boris is here. Yeah.
Right, of course. Let's go.
Oh, come on.
But where's all the names?
Yeah. Yeah.
Right. Let's go.
And let's start. Pause the trees anyways. Yeah. So we have.
All right. We
I like
got Roman is a panda. Panda duck. Roman panda duck. We have a pirate. We have someone Verstappen.
With the candle.
Come on, let's go Verstappen duck. Space duck. Nice. Bro is here. 1. That is a ridiculous name. Okay, Space duck is winning.
Maybe winner.
Maybe winner. We have a maybe winner. I don't know how to. Well, you might have one on the count there. Nice.
Good manifestation, yeah. And if you're here, write something in chat. Or I'm going to keep it. No, you are here. Shit.
Yeah, all right, guys. Are we done? That's all. I can't see the chat, so I have no idea what's going on. But yeah, we're on the big screen. Hello, everyone. Hello, mother. All right, thank you, everyone, for joining today. We are not going to be streaming tomorrow. We never do. But we're going to be on Discord. I think Boris is going to be away tomorrow, so I think maybe it's going to be only you, Ayush.
Yeah.
We'll see. Let's see if I can join. I don't think I can, but I'll see if I can join with you. Anyway, guys, we'll see you all next week on Monday, and we're going to be having a good lineup next week as well with Dirk on Tuesday to talk about the markets and see if we can get some interesting trades in after NFP. All right.
Yeah.
That's it. Thank you.
Thank you for joining. Bye-bye, guys.
Bye-bye.